up here. All right, with that being said, the next must-do thing I think that you should do when you're younger is to start investing or not to keep all of your cash in cash. Because of the value of cash going down over time due to inflation, your purchasing power of $1 is going to be a lot less in, let's say, 20 years. It's a huge reason why you don't want your entire net worth sitting in cash in a bank account earning 0% interest, because it's not going to be as worth as much as it is today. I'm sure you've heard your parents say something like, "Oh man, when I was a kid, a gallon of gas was only 5 cents and lunch was like less than $5. Well, that's going to be us just in 20 years. Had your parents just left their entire net worth in cash in a bank account in, let's say, the 60s, 70s, and 80s, well, back then, that amount of money, let's say $50,000, was worth a lot. Nowadays, $50,000 is not worth that much anymore. So the solution here is to invest in assets that keep up with inflation or even beat inflation over time. The S&P 500, for example, if you invested in it through an index fund or an ETF, basically, it returns 8% a year on average for the past 50 years. That's why I do think investing while you're young is always going to be a good idea, especially for the long term, because at least your money is going to keep up with inflation, if not beat it. But I will say you should not be investing your money unless you have your financial foundation covered, which means you have most of your high interest rate debt paid off, as well as you have that emergency fund that we talked